So what I thought I'd do in this particular video is just give you an update on more so a broader look at individual stocks. What I've done, I've made a little watch list over here on the left hand side of my screen. You can see it's got Disney, Gilead Sciences, HD, Starbucks, and Targa. What I thought I'd do is just run through some of the technicals on these very heavily traded, very heavily backed, followed stocks out there, which are external to our pro analysis work list. The reason why is because there has been somewhat of technical damage done on the broad markets, also on the three US markets, the equity markets, and it's really showing up in these particular stocks also. What I thought I'd do again is give you an update and just show you why it's a little bit risky at least to be looking at long-term buy and holds, or at least sort of getting into swing trades at this particular moment in time. If you haven't watched the previous video, which I've just released, it was updated just before this particular video. I'd encourage you to do so to get an understanding of what the overall market picture is looking to do. And what I'm going to do is tie this into more so that market update, just factoring in again these external shares. So if I take a look at GILD, ticker symbol GILD, company name Gilead Sciences, you can see that we've been in a very, very choppy type of symmetrical triangle. A lot of people are really struggling to understand what on earth is going on with this particular stock. If you go back in time, it's been a lovely stock to trade, very, very disciplined. It likes to move a fair bit, but at the moment, I mean, we've just been making a series of lower highs and also higher lows. You can see that we're really nearing the apex of this symmetrical triangle. Very neutral type of chart pattern taking place. If I also factor in the Bollinger Band, you can see that we're sort of getting into a nice little squeeze. Now, with the market looking so weak and this type of chart pattern, probability dictates that we're actually going to break to the downside. If we were in a bull market and in a symmetrical triangle, it would probably dictate that we were going to break to the upside. But given again the weakness of the overall markets, the type of candlestick showing up at the moment, I'm also inclined to see that 95.13 trade trigger break set up and break down. Now, what is most important about this is that if you range or if you measure the first rotation of this type of wave in the symmetrical triangle, it can give us a range breakout. So we can expect to see, well, how far will this stock move once we break out of this range? And what we can do is we can measure up here. So we'll factor this in at about 115. And we've got a low price down here at about 90. So we'll just say it's $15 or $14 from the breakout. The breakout is about 100. You can say that we'll have targets up here at about 114 on the upside. If we break out, we will also have, oh, pardon me, $24. What am I saying? $24. So we'll have targets up here at 124 on the upside. Let me just put this up here. 124, 123, that looks pretty good right about there. Let me change it to the red color. And also on the downside, we'll be paying attention to really $75. Comes in all the way down here. Two very realistic targets on this particular stock when we get outside of this range. Let me just put that into perspective for you. Target 1 and target 1 based on the range breakout of these two triggers. So pay attention to Gilead. It's been somewhat a little bit hard to trade most recently, but we are going to see a volatility breakout very, very soon. Disney's been in an upward trend. You can see we've been establishing most recently higher highs, higher lows. Everything looks good on the surface, but when we factor in divergence setting up, you can see we've made a high in price, but a lower high on the MACD. Momentum is starting to exhaust itself to the upside. That's what divergence sets up, and it gives us a 1, 2, 3 confirmation of a reversal. So what we'll do is we'll probably break down below this low here. We'll rally back up. We'll set up a lower high, and this will be the rollover for the short on Disney. So you can sort of start to see how these things are beginning to form. This process will probably take us into and probably all the way through April before we get the really good short opportunity on this particular stock. It's just something to be mindful of. Now, HD has had a very interesting gap. This is what we call an exhaustion gap. You can see we gapped up most recently on earnings. Instead of continuing in the bullish trend, we came back down and we filled it. This is what we call an exhaustion gap. Very bearish for the at least the trending scenario of price for a stock. You can see we rallied back up. We've established almost a double top right now, and we're sitting right on that neckline. So this is a stock which is showing exceptional weakness. It wouldn't surprise me whatsoever to see HD come back down and trade as low as about 105, maybe even as low as about $100 a share over the coming weeks. So please pay attention to HD. Starbucks has come out most recently with an earnings announcement. Immediately, it sort of, was welcomed. I mean, it got the tick of approval by investors and traders, but look at this engulfing candlestick pattern taking place on Wednesday. Again, today we saw a little bit of follow through. This looks awfully a lot like what we call an island reversal candlestick chart pattern, or a candlestick and chart pattern. You can see that we've failed the gap. We've got an open island up here. This is very, very bearish. Now, again, it hasn't really operated on good volume. That's one thing which hasn't really factored into the price, but I'm paying attention to continued weakness in this stock. If we start start to close below about $90 a share. Then we've got targets on Starbucks coming in about $85, $86 a share. So keep that on your watch list. And to conclude with, you have Target's been in somewhat of a bullish trend. I mean, it's been pretty nice since, again, that earnings announcement over here in November. It's gone through periods of consolidation, periods of slowdown, and most recently we've really got an interesting array of candlesticks. If we zoom in on the technical picture, at least on Tuesday we saw a shooting star. We did get a bullish engulfing candlestick pattern, but it's not really at the right location. Then we did see a bearish piercing type of candle, followed by a gap down and just a long day Morobozu. This is exceptionally weak for the price of Target. We have a spinning top over here, a high wave spinning top, another spinning top right here. We're starting to see the slowdown, and again the reversal take place in Target. Look at this bearish divergence again. Very, very important that you understand bearish divergence. This is similar to that type of trade setup which I just referenced on Disney, where you get the 1, 2, 3 reversal. Let me just come back down into Target, where you get that 1, 2, 3. It sets up over maybe 1 or 2 months, and you get something like that. That is the type of scenario which I'm looking for on Target. It doesn't mean that you immediately short it at this location. You need to wait for the trade to set up, and you get those levels and those really clear entries moving forward. So that's a bit of an update on those 5 individual stocks at least. Sorry for that slight hiccup on the calculation of the Gilead measured move. Let me just get that right. It was a $90 breakout up to about $115. Yes, that is again $25. My apologies for that slip up, not 15. So they are the right targets right here, and about 123, 124, and also $75, $76 on the downside. So pay attention to that. And also, if you have any questions, success@pivotpoint-trading.com. Have a great evening. Have a great Thursday evening. I'll see you over the weekend in that pro analysis work list. All the best. Goodbye.